The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We're going to take a look at the soybean market here. As you recall, we had our good friend Norm Winsky from Astro Trends on last week, and we were looking at this ABCD pattern in the beans at that 10, 20 level. As you can see now, they've rallied almost $1 a bushel. For those of you that don't trade beans too often, that's equivalent of almost $5,000, which is a pretty substantial move over a 4-day period. We saw a very strong move also in the corn market, and then also we had a strong move also in the wheat market. So that's been a heck of a run. Now we're coming up against some pretty stiff resistance at the 61% retracement level here in beans, but we'll have to let the market tell us whether it's going to go higher or stop up in this area right here. Yesterday we talked about the cattle market because we're getting down very close to the price that we looked at. We did hit the lower end of this range. We got down to the 108 level, and we're getting very, very close to that 107.50 level in cattle, and that would be a very interesting spot to to be a buyer. We're going to try to have our good friend Rich Anderson on Friday. I've got him scheduled for that, so hopefully he'll be able to come on and give us some insight in cattle, because he was expecting this move down. Once we broke below that 110 level, we've broken another 3 cents. We could still get down to 106, so we got a day or two to see if that's going to be the case. All right, let's just get to the heavy metal stuff here. This is what's going on in the stock market, folks, as near as I can tell. If you'll take a look here at the long-term chart here on the daily chart of the New York Stock Exchange Index, which is the big market, you can see we're making that 1, 2, 3, 4, 5 expanding triangle exactly at the 786 yesterday. The 786 number was 10,748 and, or excuse me, 10,746, and we got to 10,748. We closed at 10,735. Looks like we're going to be touching that high again today, given what the S&P is doing early in the morning. But this is the real market, folks. What they're telling you in the news about stocks making new highs, yes, they are making new highs in the S&P and the Dow. They're not even close in the NASDAQ. And not only that, but if you look at the overall structure of the market, which is the NYSE, you can see that we're still in a downtrend. We had that perfect ABCD down there in January and February, and now we're having this culmination rally over the last 6 months. That's the way it looks to me. And I imagine if we get above 2160 in the S&P, I'll have to say this thing's probably going to go a whole lot higher. So we'll wait and see what's going on. The things that I'm involved in right now, we just took some profits in the long British pound yesterday, and we are still in the crude oil contract. It's got a little over a buck of a barrel in it, and then also we are still in the bonds that are starting to act in our favors, but it's still a little bit early to say whether that's going to start to work. We're starting to see signs of it, though, as you look at some of the other areas in the market, like the German bond. Then you'll see that this is, we're seeing divergences. Also in the Treasury notes, even as we start to rally back in some of these things today, we're only up we hit the exact 61% retracement in the bonds yesterday. If you recall, we were looking at 173.18. The low was 173.12. We rallied about a point and a half off that bottom. And if it starts to get up into the new high ground, then maybe this interest rate thing is going to go on forever. But right now, it looks like it's going to be in an area where it's going to have some pretty stiff resistance. But the news is certainly coming out, that the stock market is the place to be. But if you look at that New York Stock Exchange index, it doesn't look that bullish to me. And that's been pretty much the way to look at this. I mean, when the bottom was being made, it did a really good job of saying this market's getting ready to rally in January and February. That was pretty much a no-brainer. But now where we are is that, we're in the section where we got to be looking at the other side of this. The only thing that's negative about this is that the Bradley model, should have turned down, and it hasn't. And it's not very wrong that it's off by more than 5 days, and we're already past 5 days. So either this thing is totally wrong, or I've missed something completely, and it might be both of those things. So we'll have to wait till the market turns down. If we go below the 2130 level in the S&P, then I would say, you're looking at, some really stiff resistance, and we're getting ready to go a lot lower. One of the questions that someone emailed me this morning was about a comment that was put on Bloomberg and CNBC this morning about Jeff Grunlack, who's one of the big hedge fund managers, and he's saying that stocks are either going to offer one of the best shorting opportunities right here that he's seen in a long time if they don't go any higher. That was his caveat, if they don't go any higher. So we'll see how much, if we don't go any higher, what that really means. So we'll have to, just give it a little bit of a thought. But we've had some pretty good selling in Germany on the German Bund. It got down all the way down to the 166 level again last night after we had hit this. We talked about this pattern yesterday, and you'll see that, hold on one second here. There we go. And we got down to this 166 and change level. And and this is from 2 weeks ago, folks. So this has not been able to make new highs in 2 weeks, where we just made new highs in bonds just 2 days ago. So that's the main thing. We'll see what would happen. So anyway, that's what we're looking at on the long term. But we'll see if these things are going to turn down or not. The long term in the stock market, let me put out one other thing here. The number of 2160 in the S&P is really, really important, folks, because on March the 9th of, it was March 9th of the 2009, we hit 216 in the S&P Cash Monthly, SPY. And at 2160, that would be 10 times in the last 7 years. So that would be an unusual move, but that's what's really happening. So anyway, this is what we got to keep an eye on. We're very, very close, I believe, and believe me, it's like hand grenades. You don't want to be too close to the hand grenade once you pull the pin, so you have to be really careful. The crude oil is working well, and what the plan is, someone's asked the secondary plan in the we got to take a break here. We'll get back to the British pound in just a second, folks.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and we are talking about the overall stock market, the fact that it is basically doing the same thing that it's done many times before, and that is they're talking about how bullish the stock market is. But if you look at that New York Stock Exchange Index, you frankly have a hard time to make a case for it being bullish. I know it's hard to believe, but if you listen to what the commentators are saying and then look at the charts, you see a totally different picture. Because remember, the S&P, the Dow, and the NASDAQ, you're talking about 100 heavily weighted cap stocks that are making this thing move. And you're looking at a population of around 8,000 stocks. And you're letting 100 stocks decide what the market's doing, and I don't think that is the right thing to do. But remember, I'm just a technician. I don't understand the fundamentals or anything. I'm just looking at the basic structure of the market from a technical perspective, and that's really what I'm watching. We had a question from one of our dinners this morning about the soybeans and also the wheat and the corn. We've had a very good rally this week. How much it's going to go from here, we have to wait and see. But when the market runs 85 cents, which is roughly $4,500 in a matter of 3 or 4 days, it's telling you that is pretty strong. And so you have to be extremely careful in here if you want to try the short side of the market, which I'm not recommending that. I mean, it was a really good buy down there, but you certainly don't want to sell it just because it's rallied 80 cents. You'd have to have something else, to see if it's going to hold this level. Now, beans are at the 61% retracement. Wheat's at a 38% retracement. And corn is completing a nice ABCD pattern over the past 5 days up at this 370 a bushel level. So this might be a little bit of a resting period for the grains, but any strength at all today in the grains takes them to a whole new level. So you have to pay attention to that. Another question that someone has talked about is the fact that we left these big island reversals and TBT and TLT, and that's mainly because the market is not open during the time when it's making the highs and lows. That's one of the disadvantages of trading an ETF that you're faced with, is that you don't get the same price levels that you see sometime overnight. This was especially true in silver and gold, back on the 27th of June when we had the move in silver that was, well, no, the move in silver was actually July 3rd and 4th, where it went, traded $23,000, in a matter of a few days, 20 hours or something like that. In fact, I'll put this chart up to remind you what it looked like, because it was really, really moving quite a bit. And you notice we got down all the way down. If you'll notice the bottom of the chart on this silver here, you'll notice that 1.618. Folks, that was a spot on low yesterday. We hit that right on the money. So it's going to be interesting. And then we've rallied all the way back to 2050, which was a 61% retracement from the high that we made on July 3rd. So silver has been much, much more bullish than the gold market, because gold broke $50 to the downside. And so far, all it's been able to do is to rally $17 to the 38% level. So this is the key. Any move below 1328 in the gold, folks, in my opinion, is going to tell you that you're going to be probably going to a much lower price. Let's just take a look at this chart since we're discussing gold here. You'll notice we made our double top up here on July 6th and 7th at the 1378, and remember, on the long-term weekly chart, that was a 382 retracement from the high back in 2011, and it was also a 61% retracement from the high on 2014. So we've just completed a major swing area in this area, but anything below 1328, which you'll see on that chart, is the 382 retracement from the low on the 23rd of June. That will tell us that we're starting to head down. So pay attention when you see the 1.618 expansion number, because that's really the line in the sand. If you go beyond that, it can literally go, anywhere that it wants to go. But it's still real early in this market. We haven't only pulled back 3 or 4 days here in the gold market, so nothing really has happened. Very, very dramatic anyway. So we'll see. And should we get to new highs, then you're going to be looking at probably 1490 as the next, upthrust move in the gold, which we could certainly see that, because it's certainly acting bullish. Even on the pullbacks, it stopped exactly where it is. And in silver's case, it rallied right back to the 61% retracement, and that's $1.50, folks. So that's a pretty big run. Anyway, this is what we're watching here, and we'll keep an eye on some of these things as we go through. One question someone's had about the utilities. This was the one from our good friend Jim Bartolione. And we'll put this up, and you'll see that that is a perfect 3-drive pattern. That goes back to 1942, folks. That I was just a little shaver then, but this is a perfect 3-drive pattern. It's got all the symmetry that you could possibly ask for. And if you like technical analysis, this is basically telling you that the utilities is over, and that usually means that higher interest rates are coming. So there's only a couple of people in the world that are looking for higher interest rates. I happen to be one. I don't know who the other one is, but there's probably someone else out there. But I've been that way before, so we'll see. And I've been wrong a lot, so remember that too. That's always the caveat, that this is technical analysis. And, when you're wrong, you've got to step out of the way and, let the market, give you some other opportunities, whether it's in crude oil or whether it's in the British pound or gold or anything. But you always have to keep your options open. Regarding the crude oil, we've had a nice move off the bottom, about $1.70 a barrel. The gasoline rallied better than, it rallied 5 cents off the bottom. The heating oil rallied 6 cents off the bottom. And then, of course, we have a report today on the oil, and that'll make the thing go crazy. The only way to handle this is, if you want to get in the market, put an order in, to buy it on a 61% retracement of the move, which would take you down to about the 45.20 level, somewhere in that ballpark. But I don't think we're going to make a new low now in oil at that 44.70. We're trading, almost $2 a barrel, well, $1.80 a barrel above that. So this is what it looks like, because we had all those ABCD patterns forming in both heating oil, crude oil, and the gasoline. And that tells us that we should be spot on, for another move to the upside. How much it's going to be, this is what we have to wait and see. That's what it's looking like this morning. And so we're no guests today, so it's just me. If you have any questions, it's 877-927-6648, and I'll be happy to answer any questions if I can. And we'll be talking to you right after this break.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're talk a little bit about the Hang Seng. We've had a question come in from Hong Kong regarding this, and if you'll notice, the Hang Seng is making a perfect ABCD pattern. It took out the highs of the last several weeks on the open this morning in Hong Kong, and then closed about 120 points below that. But it is a perfect ABC structure. It has very good symmetry in the AB leg and in the CD leg, And of course, the CD leg terminates at the 786 of the old high. So that is a perfect Gartley pattern in the Hang Seng. The $64 question is whether it's going to work or not. If you look across at the emerging markets in China, we're seeing still they've had some rally, of course, with the rest of the markets. That's sympathetic, as you can easily imagine that, but they're not anywhere near. Well, they're years away from making new highs. But here in the United States, of course, we are making new highs in the Dow Jones and in the S&P. The Nasdaq is not doing that. Tom O'Brien made a big deal about that, quite a little bit earlier this morning. Now, I wanted to share with you a chart from our good friend Larry Williams, one of the real big names in the business, one of the most honest and philanthropic people you'd ever want to meet, and incredibly successful fellow. But he is also bearish in the Treasury bonds, and I wanted to show you his forecast. And what this is, it's a pattern recognition tool that he uses that matches up what prices have done over the last 20 days as far as a cycle component. And as you can see, that cycle is coming in here on the 11th or 12th of July. And if that's the case, we should be down in through September, if that is going to be the case. Now, that matched up with the pattern that we were looking at. Remember, we had that 1.618 expansion in the bonds up in that area. So that tells us that should be it. Now, should we get above the 177 level in the bonds, we'll put this up here again because it hit it 3 days in a row. But if we get above that 177.12 level again, then this would all be wrong, and we'll be able to do that. Yes, it is Michelle Williams' father. I actually had Michelle on my knee when she was just about 6 months old up in Kalispell, Montana, when Larry lived up there, and she turned into a fabulous actress, and she's got the #1 show on Broadway where she performs for 2 hours nonstop with Jeff Bridges. So it's been a big, I can't remember the name of the Broadway show, but it's really a big one. Anyway, she's a very, very talented. She's been up for 2 Academy Awards. She finished, I guess, second in the running a few years ago, but to be up for 2 Academy Awards. Larry told me once when she was just a little girl, I think 8 or 9 years old, that since the time she was 3, that's all she ever wanted to do was to be a actress, and she certainly is an actress. She has a little daughter named Matilda, and that's with she was married to Heath Ledger, the Academy Award winner who lost his life to drugs a few years ago. He was in the movie, he played the Joker in the last Batman series. An incredibly talented fellow. That's insane what they do with these drugs. Anyway, let's move on to the rest of these markets. You're not interested in the history of my life or any of that stuff. I have requests all the time for people to ask me to tell me stories about the people that I've met through the years in the business, especially when I was at Drexel. And on the floor of the exchange also, but it's actually was really a it's been a terrific career for me. But I don't want to bore you with these stories because they're important to me, but they're not they're not important to you. So they asked me who is the most important person that I met in the entertainment business during the time I was at Drexel. And I would have to say, without doubt, it would have been Bob Hope. Bob Hope came into the office several times during the 6 years that I was there, and each time it was, it was just really amazing. He was really a real gentleman and incredibly, oh my gosh, is that guy talented? But he's really a nice fellow. But I knew Gene Roddenberry from Star Trek was one of my customers, and then I also had Kirk Kerkorian, and that was Mr. Las Vegas. He took over all of Howard Hughes's properties, and he was very influential in my life. So been pretty lucky. It's the bottom line. Okay, let's move on to the rest of the markets here. We talked about stocks, we've talked about gold, we've talked about silver. Let's talk just a little bit about the euro here, because we're still down in this area where the euro is trying to make some type of a bottom. We're still trading in that 109 and change level, but anytime we get below 109 now, after this little tiny rally that we've had, that tells us that the market, wants to go lower, because we haven't been able to bounce very much in this euro, folks. After the ABCD at the Brexit thing that happened on the 24th, you see we rallied up to a 50% retracement of point C. And if the market was really good, it should have rallied a whole lot more. It should have got all the way up to probably 113, and we've not been able to do that. Even the pound, the pound's only rallied back 500 points off the bottom, and that was one that was our trade of the week this week, because it was really quite interesting. Someone's asked a question about the story about Drexel. If you want to read a good book, it's called The Den of Thieves, and that's the real story. There were two books written about the Drexel years. One is called The Predatory Ball. That book was financed by Mike Milken. So that's really biased, but the real book, James, can't remember his Lovell or something like that, who wrote the book Den of Thieves, but it's really good. And if you look at the pictures in there, you'll see the office on the corner of Rodeo and Wilshire. And if you look at the back building where there's a little tiny window back there, that was the area of our offices back there for the commodity department. So it was really fun. On the other side of that building, which would be on Rodeo Drive, was the little barber shop called Tony's. The only thing is that Tony didn't open for business. He only did movie stars, and he was always busy. And I don't think it was James Stewart. I could be wrong, Peak, but I don't think that that's what it was. But I know The Den of Thieves is the book if you want to read about Drexel Burnham Lambert and get the real skinny of what it was about. That was really the important work, to tell you how they did it. And they would still be, they'd probably be bigger than Goldman Sachs if Mike hadn't have been so darn greedy. And that's really what brought him down. Do you know that in 1977, Mike Milken personally made more than McDonald's? I mean, that's just absolutely blew. Yes, it is. It was James Stewart. Thank you very much, Pete. Very good. 877-927-6648.
Today, many commodities are trading at relative lows. And now you can take advantage with Everbank's new limited-time, 5-year, market-safe currency comeback CD. This indexed and U.S. dollar-denominated CD offers 100% principal protection and is based on the equally rated performance of currencies of Australia, Canada, Chile, Mexico, and South Africa. These 5 countries are especially rich in commodities, and their respective currencies are poised to do well should commodity prices begin to recover. Keep in mind that no APY, or periodic rate of interest, is paid on the CD. Don't miss out on this innovative new financial opportunity. CDs must be opened and funded by the upcoming July 14th deadline. To apply online and learn more about the CD, including product terms and disclosures, visit everbank.com/TFNN now. This advertisement is sponsored content. Everbank is a member FDIC.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Let's see what we got here. Testing 1, 2, 3. Okay, I guess I'm back on the air. I didn't hear the prompt. Whoa, sorry, I didn't hear the prompt, folks. Someone asked a question about whether Milken would have served any jail time. Well, he did serve jail time. I think he had 2 years, and he was in a minimum security prison. It didn't have bars. It didn't have, just like a regular jail. It was more like a hotel. And he had a big screen TV. He had a fax machine, his telephone, and his quote machine there. And his meals were all catered. And so he really had a pretty good thing. But, these things, these are all predetermined when you're dealing with this kind of stuff, folks. You don't have to be a rocket scientist to realize that something's wrong when you see the Department of Justice and I'm going to shut up, otherwise I'm going to get into trouble. Let's just go back and see what's happening, with some of these markets. We were supposed to open a little bit higher in the New York Stock Exchange Index, but we did not. We opened lower. That sort of confirms that number that we're looking at in that New York Stock Exchange Index at 786. So we'll be very, very cautious to see, what happens with this during the times of these next few days, because it's going to get more volatile as we go through the rest of this time. So we'll have a pretty good idea when we're looking at it. So we'll have to see what's going on. Some of my colleagues are telling me to shut up about the legal system, and I'm sure I should, because I don't know anything about that would be the last profession I would probably go into, would be to be a I think I'd go into a high-level window washing, and I have vertigo, so I would probably be better at that than I would be an attorney. However, I used to, a lot of you folks don't know this, but I was a expert witness for several years back in the mid-'80s, because I did about 30 cases for some of the large law firms in Los Angeles. I was very fortunate. I only lost one case, and that was the one case I was sure I was going to win. But it was interesting to see, how these brokerage companies not manipulate, but how they try to use the legal system in their favor, which that's what the legal system is for, I guess. All right, let's get on to the crude oil. We're now at a 38% retracement of the move over the last several days. We went from 44.40 up to 46.80. 380. We're now at the 382 retracement here. We're down 80 pips from the high. That's the 382 at 46 even. I know we've got the report coming out. I'm not sure exactly when it comes out, but it's going to be pretty volatile like it usually is. Whenever those numbers come out, people make it jump around up and down like the things go all the time. When my little, hold on a second, we've got a question coming into the room here, and we'll see if we've got a caller from Philly, our main man, Mr. Z. Would it be? How are you, my friend?
Hey, Larry. I love those Drexel and historical stories. Those are just fabulous.
Well, thank you. I has a long and flowered past, I would say. What can I do for you, my friend?
Please, the daily chart on the stock of Amazon, AMZN, please.
Sure.
Have a observation and a question. Larry, Amazon stock peaked right after Christmas, up at $700 a share, and then underwent a waterfall selling decline into those January and February lows down under 500. Now, based upon that decline, I did a chart that looked at the fib expansions up to new highs. And Amazon stock yesterday or the day before got up to 758.59. Mm-hmm. And Larry, that's exactly the fib 1272 expansion mark that you use as a trader.
Yep, it was spot on for sure.
So that's the observation. We all know the company. We all know the stock. As a trader, do you short it there or no?
No, I do very little stocks, actually. Only when someone asks me to do it, then I will be able to do it. But other than that, I just I just don't do it, John. It's just not. It just doesn't fit in well.
Okay, I appreciate that comment. Well, thank you.
Okay, thanks. It's good having you back. Everybody missed you.
Thanks so much. By the way, I'll just share this with you. You remarked on the soybean market having this nice run up to $11.18 off. It's almost a full dollar, of course, off that low last Friday or Thursday at 10:21. The market, I will tell you, Larry, is reacting. Traders are buying in advance of what is forecast to be very hot weather showing up starting next week that has the threat, anyway, of lasting for more than a week or two. And if that's the case, soybeans could rally over that $12 mark if that pans out. But, of course, that's a forecast. That's not actual. I did want to just share with you and your listeners just a phenomenal application of Tommy O'Brien's tool on those beans. Last week when we got down to 1021, we got down to the bottom of a high-volume rally bar from May. And Tommy has often applied that signal to stock trading. And the low of that May bar back that month of May was $10.19. So just using Tommy's tool of saying if a market falls into a high-volume rally bar with lower volume, you get into it just a little bit. It often goes to the bottom, which it did, but that's the buy. I just had to share that tool that Tommy has used and taught. It doesn't occur all that often, but I have to tell you, when it does, you got to grab it. So thanks, Tommy, and for you doing the show.
Well, thank you for being on, too, because you were certainly bullish the beans back then, too, and you were telling everyone that was really a probably good opportunity, and it certainly turned out to be that way. But we always enjoy hearing from you, John, so all the best to you, my friend, and next time in Philly, we'll break some bread together.
Excellent. Larry, keep telling those stories. We love them.
Okay, John, thanks a lot.
Bye now. Bye.
You bet. That was Mr. Z out of Philadelphia, one of the better traders that they have around the East Coast, West Coast, and any coast, as far as I'm concerned. He's very, very adept at what he does. Right now, the market's selling off. We're actually down just a tad today. It was due to be a little bit higher, but its selling came in and it started to move a little bit lower. Regarding the crude oil numbers that comes out, I believe it comes out at about 10:30 Eastern time, and it is always pretty wild. The 61% retracement, we're right at the 382 right now, but the 61% retracement is down another 60 points from there, and 60 points in an oil report is really not very much. So 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks. And I posted the chart of Amazon. We were talking with Mr. Z out of Philadelphia, and John pointed out that we were up at this 1.27 at the 755 level. So keep an eye on Amazon. The next chart that I wanted to show you, we've looked at many times, but this is the really time to pay attention to it, because today we hit the exact 786 retracement of this move at the 107.48 level, 10,748 level. And if this is correct, we turn down today, and we're going to have a pretty, either starting a major bear market or a pretty severe correction. Remember that the fact that the S&P made new highs and the Dow made new highs, remember those are only a few stocks and they're heavily cap weighted, so it's not a very fair assessment. This is what the real market is. It's a New York Stock Exchange Index. We've lived and died by that over the years. It served us well, and I think it's serving us well at the present time. So keep a close eye on it, because we're in an area where we're getting ready to see some, really big fireworks. And I believe that Brexit thing was just another, we should learn from these things, folks. They tried to do the same thing with Greece, if you remember. The world was going to come to end with Greece. The world was going to come to the end with Great Britain. Come on, let's look at the charts and they'll give you an idea of where the heck the things are going. As for a trade today, keep an eye on the oil at 45.30. That should be a good spot for holding if it's any good. And anytime we go below 44.70, I would think that it would be a pretty tough time. Now, we just made a 38% retracement in the gold up here at the 1346 level. And if it's good, it's going to take off and get above 1350 pretty quick. But if we go below 1328, the major high in gold for this cycle is in, and it should be down for at least 3 to 5 weeks, I would think, because we had such a long run of, better than 2 months without any correction at all, to say other than $40 to $50. So 877-927-6648.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.